we've had high leverage within the industry for a number of years. With ESMA reducing leverage or bringing in a leverage cap, I mean, it's helped in many ways. Truthfully, though, it's just made it a longer process now for people to lose money. Because unfortunately, if a trader is bad, they're bad. It's as simple as that. Education does help, but let's be honest, and especially if you're a man, and I'm not being sexist in any way, it's hard to be told you're doing something wrong.
That's right. I think it's been engineered that way to a large extent by the marketing imagery that's been portrayed. And a lot of it's been sent out to make it look like a kind of very macho business to make retail traders who shouldn't really be trading, lower end retail traders who shouldn't really be trading, get very addicted very quickly. And that's really doesn't belong in our industry. We should now be looking towards getting the Interactive Brokers got this right, $10,000 to $15,000 deposit upwards, and you have to qualify yourself as an actual knowledgeable trader. And I think all the retail side should start looking towards doing that.
Well, I mean, there has been a degree of that with appropriateness tests that are in place across anyone that's within Europe. They have those in place. The challenge you have, though, is the questions that are asked. I question some of the questions that get posed to a purported retail client. Many brokers now are looking for professional clients, but how do you actually identify professional clients? And when you are a broker, it has become so commoditized now. How do you differentiate between one broker to another? Truthfully, it should always come down to the quality of service and execution that you get. But because there are governing bodies, but is anyone really looking at that quality of execution?
No, they're not. Not within the governing bodies, except for one or two are, like the NFA in America. They know the industry well, and that's a regulator that understands how our business works properly. You could go to a US senator who's a commissioner at the CFTC and talk about price matching engines and how to connect an API. They know exactly what this all means, how to then report trades and how to distinguish what trade was slipped, and they know all that. Many other regulators don't. They're just looking for how you secure a customer and don't let him run a very big risk of loss, and if there's loss, there's some recourse over the brokerage. But the actual ins and outs and the structural way the companies in the industry work, is not so well known by regulators. But that's one aspect where it should be. But I also think we as an industry should start to innovate the new platforms which attract good quality traders and allow them to use news and analytics properly. And the brokerages, as you rightly say, Ed, that they're so commoditized and there's so many similar platforms, which is basically a MetaTrader with a different brand on it, and the brokerage that runs that MetaTrader has no control over what the platform offers. This is obsolete, and we've got to now start investing in new services which are unique to specific types of customer. I think we can do the flexible trading platforms. We can certainly do that, I'm sure.
Yeah, I think one of the challenges, you have so many people where they try to differentiate between institutional and retail. There really shouldn't be that much of a gap between the two. Yes, knowledge is king and understanding what flow is actually out there. The issue that we have in a leveraged market is when you trade with a broker, it's a captive audience. If I open a position with a broker, in order to realize my profit or loss, I have to close it with that broker. In the institutional world, it doesn't work that way. You're bank A, you're bank B. I sell to you, I buy from you. I'm square, I'm flat. Right. It now becomes much more competitive because you're now competing for my business. Most brokerages now, they've got extremely tight spreads, but how does that really differentiate from someone else?
It doesn't much because the spreads are not governed by that particular brokerage. It's what you can get from MetaTrader.
Correct.
And therefore, there's an also-ran sort of society. And you see that in areas which are populous with retail brands. And I call them brands because they're basically white labels of a platform provider. So if you have a new type of business where your platform is yours, your client offering is unique or bespoke, and you have a longer term client base, then you've got a business which is yours, and you can therefore you can even exit. If you look at some of the large MetaTrader-based brokers, some of them are making 500 million a month in revenues, but they can't IPO because there's no intellectual property.
Correct.
So it's a zero sum. As you rightly say, the institutional side looks at buy side and sell side. Some of the retail brands don't know what that terminology means.
Or even if you trade on a true OTC platform, so whether it be Reuters or EBS or Hotspot, the big difference, and that's where I kind of came from that world, but in that world, I can actually place my orders, my limit orders, into a true order book. So if the market is 10.11, I don't want to pay that spread. I put a 10.5 bid in. I can do that on an OTC platform. I can't do that on any leverage platform out there. And as a broker, I'm not suggesting they do this. I mean, you'd have to work out the commercial structure because you'd now have to charge commission. But for a retail trader to actually physically trade with another retail trader, market's 10.11, I put a 10.5 bid in. You're another retail trader, you want to sell, you sell to me at 10.5. We match, that broker then earns a little bit of commission out of that. Now it becomes a more competitive market because I can actually close the spread. I'm not governed by that spread. Or if I'm trading, I don't know, it's a bad example, but we look at things like cryptos, where they typically are much wider spreads.
And very variable.
Very variable. So now just imagine if you were in a position where I could put my own limit orders into a platform where other people could see that limit order. I'm now closing this, I'm making the market much more efficient, much more competitive. You'd run away from these issues about, spread widening because now I am the ball, as it were. It's my interest in the market. That's where I'd like to think the market could go at some point, but the problem is we've got some very large brokerages out there that have a very good revenue stream based on a captive audience that they have, and for them to adopt something like this would be a complete kind of 180 change with the way that they do business now.
Apathy sets in because once another they get it scared by something that's out of their hands, like regulators or a new software upgrade that's not their software, and then the next week a lot of revenues come in and they basically just drop all plans to modernize, which is why we are a technology-led business on which 80% of the business relies on a 14-year-old platform. That doesn't exist in any other industry in the world.
It relies on a dated platform. The innovation, and there are brokerages out there that have created their own platform. So CMC, IG, and they've got some great platforms that are out there.
Those two examples are great. Those are fantastic. The CMC Markets platform is a fantastic piece of software.
But again, it is a captive audience.
It is, and it's CFDs only. It's not multi-asset. That platform connected to multi-asset would be amazing, but because it's owned by a CFD broker, it's an amazing platform on which you can trade CFDs.
No, absolutely, and I think this is where the challenge next for all brokers or anyone within the leveraged margin trading space is what is going to be my differentiator. What is going to set me apart? It's not necessarily about my tight prices, because I've been in this business long enough to know I can give you an even tighter price. Try and trade on it. You might get slipped or you might get a spinning circle. But I think to try and be more transparent is the next challenge. Regulation is forcing that. Not just leverage caps, but MiFID and the reporting that goes on. The way that many brokers have now had to redesign websites, be much more open, providing key information documents about the products that they're actually selling or marketing. But it should be a much more level playing field.
I think so too. I think it should be democratized, where you can have a platform that connects to multiple brokerages.
Would be wonderful.
Would be amazing.
If you imagine what happened in the institutional world years ago when you had all these different multiple liquidity sources, they use an aggregator, regardless of who it was, to aggregate that into best bid, best ask.
We can do that nowadays for the retail. We can do that with an app.
If you could do that, but But not only do you need to be able to aggregate that, but where, as I said before, I sell to you, I buy from you, I'm flat.
Yes, that's
I'm
right.
square. I've got no financing charges here.
No,
I've got a nice clearer somewhere in the middle. That's the old bilateral credit that was in the institutional world for years.
Indeed.
And it would take a very brave broker to try and put something like that in place.
Let's do it.
Well, yeah. Are you going to buy the MT4? No, I'm kidding. Excellent. No,
Excellent. Nice to see you, Ed. And
No, thanks, Andrew.
Very, very glad to see you here today in London.
No, thank you very much. I appreciate it.